Good evening, everyone. Welcome to Adda 24/7, and my name is Niharika Avalia Patnagar, and I'm with you with the era of CAIIB, ABFM. So the first question is, am I audible as well as visible? Good evening, everyone. If I'm audible and as well as visible, please comment and share this session with as many people as possible. If you like this particular session, then please go ahead and click on the thumbs up as well. Okay, so I'm going to start with the module B and C today. Today I'm going to cover a good number of numericals as well. So it's going to be a blend of theory as well as numerical today. So shall we begin, everyone? Please go ahead and share the session, everyone. I think that will really boost our this particular effort again. I think that is what we look forward to. Good evening. Chaliye, let's begin with the session there. Here comes the first question, everyone. This question is from the area of capital budgeting. That is capital investment decisions from the module B there. Okay, the capital budgeting decision is a part on the availability of funds that is related to relationship between among proposed projects, or it is related to the risk associated with the particular project, or all of these. When we talk about capital budgeting or capital investing decisions, what does it exactly relate to? Go ahead, everyone, and answer. Then, everyone, am I audible clearly now, sir? When we talk about capital budgeting decision basically depends on availability of funds. Yes, it depends upon the availability of funds. Then it also depends upon the relationship between the various proposed projects as well, because we can choose between two or more projects. In comes is risk associated with the particular project. That means if there is any risk that is associated with the particular project, we'll try to weigh that particular project as well. Or the answer is all of these. The correct answer is D. All of these are correct. Okay? The correct answer is all of these. Capital budgeting or capital investment decisions includes the area of 2 3 points there, everyone. Under capital investment decisions, either you can accept a particular project or you can reject the project. If there is only one project, that is that is accept or reject decisions. Then if you have two projects and anyone, that is called mutually exclusive decision. Under this, you are given 2 points and you have to choose any one among them. And the last one is related to the capital rationing, everyone. That means allocation in terms of capital budgeting. Which part should be chosen? Shall we choose something which is related to allocation of only 20,000, 50,000, 80,000, whatever we are trying to do that, right? So it is based upon accept or reject decisions, number one, mutually exclusive, number two, or rationing, number three. So in this case, it is actually all of these. Then comes the next point, that is the present value. Profitability index is computed by dividing the total cash flows by initial investment. Present value of the cash flows by initial investment. This is PI. PI is among the modern methods which are used in capital budgeting. It is the modern method. There are two kinds of methods in capital investment decisions, that is traditional as well as the modern method. Under this, the initial investment by the total cash flows and initial investment by the present value of the cash flows. Profitability index considers the discounted cash flows. It does not take only the normal one. So yes, it considers the discounted cash flows as well. So in this case, what is it that we are going to do? In this case, what would be the answer, everyone? The profitability index can be stated as Vinil sir B. Everybody else? First of all, we will take net present value of cash flows divided by initial investment. There is a simple rule in PI or profitability: value is greater than 1. Only then accept. If your present value is less than 1, we have to reject. So there are I'm sorry, there are 2 points: greater than 1 and less than 1. If it is less than 1, then we will reject. Then that particular point is called indifference. That means you put money into it or do not put money into it. The money will not increase or decrease. Nothing of that sort would happen. Okay? The correct answer is a present value of the cash inflows by initial investment. Next point. Now this particular question relates to the area of numerical, everyone, and cost 2,10,000 with nil salvage value. That means you will not recover even a single penny out of it at the end of its 10-year life. If the annual cash inflows are rupees 30,000, the cash back period is 8 years, 7 years, 5 years, or 6 years. Basic question, not a difficult one for sure. Definitely for this. Good evening, Ananta ma'am, Rajshri ma'am. Go ahead, everyone. Please answer. I'll be discussing the solution of this as well, but please go ahead and answer, everyone. Kindly share the session and also like the session, everyone. And if you haven't subscribed the channel yet, then kindly go ahead and do the same as well. Okay, getting the answer there. Most of you have answered B there. When we talk about cashback and this cash inflows, everyone, in this case what we are having is uniform cash inflows. What we are having is when you have uniform, that means same cash inflows. Uniform cash inflows. What do you do in this case when you have uniform cash inflows? Then you take your initial investment and divide it by the uniform cash inflows. That is how you find your answer. In this case, you know that you have spent 2,10,000 and every year you can recover only 1,000. So in how many years will you recover this entire 2,10,000, everyone? In how much time can I recover this entire part? Sure, Rajshri ma'am, we'll do that in the next time. Ashish sir, any issue with that? Okay, in this case, the answer will come out to be 7 years, everyone. This is a traditional method. So technically, we are done with two of the methods there. This is traditional method. The method that we used earlier was a modern one. This is a traditional one. There, if you are using this method, now there is one more way. There, then the modern method, they have also prescribed discounted payback as well. Under inflows that is there you that you receive as it is, you discount the cash inflows and then you divide the initial investment by this cash inflows. That's the rule of discounted payback. Okay, so with every single question that I'm covering up, I'm covering at least two to three more concepts so that whatever comes in your examination you are able to do it. Another question of capital budgeting or capital investment decisions. This is in capital budgeting. The term capital rationing implies what? There is no retained earnings, that limited amount of funds are there in for investment, and that no external funds can be raised, or that no fresh investment is required in current year. Audio breaking. Just a moment. And that no external funds can be in current year. Okay, I cannot feel that. That's the rule of discounted. Okay. Am I audible clearly now, everyone? Please confirm. Is the audio issue resolved now? Vinil sir? Everybody else? Ananta ma'am? Is it solved now? Chaliye, when we talk about capital rationings, na, capital rationing is where when we know that only a limited amount of money is there in our pocket. We do not have a lot of money in our pocket. That is why we have to be very sorted with what kind of way we are using this money and where exactly we are using this money. Okay. I hope the question is clearly visible right now. Right? Done. Thank you so much, sir. So in this case, it is not about the retained earnings. Acha, when the organization is do not have retained earnings, that means they will go more towards the area of debt. That means leverage. Looking forward towards capital rationing. In this case, we say that I have only 10 rupees and I have to allocate it among three different projects. How do I split it up among the three different projects? Okay, na? That is the formula there. So in this case, the correct answer is B. This budgeting decisions. One is accept or reject. You take that particular decision that Array, this is something that we are going to do or we are not going to do, yes or no. Or you can not only accept and reject, the next point that comes is then accept or reject comes the area of the mutual exclusive. Choose between the two. And third one is capital rationing. I said I have 10 lakh rupees. Now I want to put this 10 lakh among three different projects. And how do I put it among those three different projects is the key point. Okay, na? Then next point, if the sales are of rupees 90,000, variable cost is 75%. What is the amount of contribution, everyone? With this, I'm going to ask you next question as well. This kind of question can be asked in the form of case study. This is very simple one that I've given you. I can make it complicated even, so I'll make it into a complicated question as well, so that you can actually go ahead and try that question that way. Voice issue? Just a moment then. Am I audible clearly now? Ananta ma'am? Getting B as well as C as an answer. Okay. Everybody else? How do we calculate the contribution, everyone? This part has been asked in the area of EBIT a lot, earning before interest and tax. So first of all, the formula is you take sales, you reduce only the variable cost. What you get is, thank you so much, ma'am. Then you have something called contribution. From the area of contribution, you remove the fixed cost. कोई बात नहीं मैम. I think that happened a little before na. You must have just joined there. And this is something that will give you earning before interest and tax. They are not reaching out to EBIT, but they can give a case study based upon this, everyone. This kind of question has been given in the illustrations a lot. In tomorrow's marathon, I'll be covering it all. Tomorrow, I'm going to have a full-fledged marathon of all these modules all together, everyone. That means tomorrow we'll be talking about the entire 4 modules. Okay, so now it is variable cost is 75%. The cost to sales is 90,000. The 75% portion of it goes to the area of the variable cost. So remaining, that means 90,000's 25% would be the contribution, because the sales is if 100 and variable cost is 75%, then the remaining is 25% is the contribution. So the contribution will come out to be 22,500. They can complicate this kind of question further. They can what they can give you in such questions is, instead of asking you for contribution, they can ask you that the fixed cost is also given. They'll give you the fixed cost, that the fixed cost is rupees, say fixed cost is rupees 8,000. Now can you calculate the interest, but there is a tax at the rate of 30%. Same question, everyone. Continue and solve this part. They are saying that the tax portion is of 30% and there is no interest on it. Find the ultimate earnings after tax. Same question. From this 22,500, first of all, remove the area of fixed cost. The fixed cost is of rupees 8,000. Whatever is left, you take out the interest portion out of it. There is no interest, and whatever is left, area of tax, deduct that particular tax from there. The tax is of 30%. Right? Then what would be the value earnings after tax in this case? Very good, everyone. 4350 will be the portion of tax in this case. Then it would be 4350 of tax, and earning after tax will be 10150. And if they say that the number of shareholders are 10,000, everyone, what is the EPS in this case? Earning per share. Extending the question further for you, what would be the earning per share, everyone, in this case? Earning after tax is done, then what is the earning per share in this case? Yes. In one question, doing almost every single concept of all the beginning chapters there. What do you mean by earning per share? If I say that, pata hai, I have got a total of 10 rupees and it has to be divided among 10 people. If the amount is going to be divided among 10 people, going to get 1 rupee. So in this case, if the total amount of earning is 10,150 and the number of shareholders was 10,000 there. So you divide it, it comes out to be 10.15 rupees per share. This is the earning per share, everyone. Acha, height would be height would be 1.015 na. It would be 1.015. This would be, apologies for the trouble, it would be 1.015 per share. This is the amount. Very good. Moving on to the next question. This question is from ABC system of costing. Activity based costing system. Acha, as such, this is a part of module C, then module B. So, kindly go ahead and solve the question. What are the tasks which are associated with activity based costing system? Activity based costing system means that in terms of you are doing some activity. Based upon the activity, the cost shall be allocated. Of the activity, how many times that activity is done. For example, refilling of ATMs, how many times I fill the ATM would be related to the refilling cost. ठीक है ना? It is A 3241 or 1234 or 321. Acha, let's look at this. First is allocation cost to products, identification of the cost pools, then we have identification of the cost drive of the pool rates. On a genuine note, first of all, you have to find how many cost drivers are there. Okay, that is the first thing that you need to do. And after this, the next point is if you've taken the cost drivers, then you will find the total cost as well. You find the cost drivers, then you find the ratio, then you pick up the total amounts, and then you calculate the pool rates. So technically, fourth Hey, allocation of cost should be the last one, right? Let me tell you there. In this case, the first would be the identification. First of all, you have to identify all the cost drivers. Then you will have to identify cost pools as well. Cost drivers means when we are looking forward towards the total how many the driver in this case or the activity would be refilling, and then you take up the total cost where they have specified the refilling cost in total there and other costs which are to be divided among different shares. There is identification of cost pools. Once you have identified cost pools, next is you find rate per all these things. That means if we are going to calculate now, then we will calculate what is the rate per unit, per activity, what would be the value, and the last point will be the point where we are going to consider the ultimate valuation. Very good. In this case, the correct answer would be A. It is A, not C there. It is A. 3241. Only a few people are answering. Please go ahead and answer the question. And if you like this session, don't forget to share it. And don't forget to click on the thumbs up icon as well. Such things can definitely help us to look forward towards the classes there. Done, everyone? Next question. This is again related to the activity based management. In terms of this area, they say which of the following statements are true. Number one, activity based management involves activity analysis as well as performance measurement, or activity based costing serves as a source of information in ABM. Does it work as a major source of working there? See, till the time now, earlier what used to, or they say that nahi, every area requires a different energy in terms of activity. Frequency would definitely vary in terms of the activity. How can we keep it together that way? Saraswati ma'am, according to you, it's B. Everybody else, go ahead and answer the question as well. If you're there in the class, please don't forget to like the session. Answer the question, everyone, as well. In this case, first is true that activity based costing involves analysis. And yes, if you know about the activity, it serves as a major source of information too. Because cost allocation not only becomes correct, but at the same time, you have conclusive proof about each and every activity as well. So, in this case, the correct answer would be both. That is B. Both are true. Next question, everyone. This is related to the area of module B, second last chapter. That is risk, competition risk, international risk, or all of the above. Market risk is risk of the market which leads to the demand and supply of the product. That is where people are looking forward to it and what manner. Competition is risk is basically I am going good, my competitor is getting better. That is competition risk. International risk is like there are certain things which are only in the end of the international area. How does it affect our working? That is covered in the area of international risk. Go ahead and answer, everyone. In this case, the correct answer is going to be all of the above. All these kind of risks are there. Otherwise, there are certain kind of risks as well, everyone. First is called the credit risk. Credit risk is what if I am not able to pay. That is called credit risk. Then the second point is market risk is already done. Interest rate risk. If the interest increases or interest decreases, then there is another level of fear in the among the organization that are I have taken a loan, now I have to pay more interest. That is credit risk. Right? Now comes the next question. This question is related to the area of the valuation area. I'm sorry. A particular job requires 800 kg of material. P. 500 kgs of particular material is currently stock. You have 500 already with you. Original price was basically 300, but the current resale value it has gone down to 200 rupees. If the current replacement price of this is per kg, the relevant cost of material P required for the job above is 640, 440, 300, or none of the above, everyone. What would be the valuation in this case? You already have got 500 at 2 that is 500k rupees, that for 200 rupees, but the remaining 300 kgs is the problem there, है ना? So how do you record it? At what price will you record it? The current replacement price or the price at which we had bought it? This is called relevant cost, everyone. 640, sir. Everybody else? Go ahead and answer, everyone. चलिए, now let's talk about it. First of all, 200 rupees is already sorted. There is no doubt about those 200 rupees. Because ultimately what has happened is maybe in our books of accounts it was valued at 300. But now the current value is gone. Because we, in terms of stock, we have to value it at the present situation. 200 is sorted, that is there. That is, it's 500 kgs are all done. You know what has happened with 100 kgs out of 800. So remaining 300 kgs are left. It is to be recorded at rupees 300 at which we had bought it, or 200 at which we can resell it, right? Or in this case, can we record if it is a replaced? See, the point is 200 is already something that we already have, है ना? Right? A job requires 800 kgs, 500 kgs already in stock. Now we want to buy more from the, if you want to buy more from the market, you'll buy it for 0.80 per kg, because current replacement cost means if I go and buy it in the market right away, it would be basically 0.80 per kg. So you're left with 300 kgs, multiply it by 0.80 and then calculate the answer, everyone. Everybody has been going for 640 rupees.